Very pleased to say I'm joined exclusively by Sergio Ermotti, the CEO, of course, of UBS Group. And David was talking there about the rule changes that are being pushed through here in China when it comes to foreign banks operating on the mainland. What does it mean for your business, for your securities joint venture? Have you started discussions about increasing your stake?
Well, of course, we are very pleased of this development, and yes, we have been. We started the discussions with our partners a few months ago about not only going up to 49%, we also aim in the near future, if possible, to go up to 51%. And the new legislation allows that to happen, and so we are pursuing that strategy to continue to grow our business in China. And we are very pleased about those developments.
What is the time frame for that potential increase in stake to 51%?
It takes always, back and forth discussions between us and our partners. We were very happy with the experience we made with our local partners, so we want to find a win-win situation for everybody, and it's a matter of months, and hopefully we can resolve those discussions.
How would that set you up? How does that set UBS up to expand in China going forward once you do have that 51%?
Honestly, strategically speaking, it doesn't really change a lot because we have been in full control from a managerial standpoint of view of our operations in China. And it's more about financial agreements than it is from a strategic standpoint of view. We have been growing our business. 2 years ago, we set ambitions by 2020 to double our headcount in China, and we are actually on track to achieve that. We were 600 people back in 2016. We're going to be around 1,200 at the end of 2018, so we are in line with our plans to grow our business regardless of the stakes. But of course, if we can have a more rounded, financial participation in our business here, we do welcome that.
So the headcount is growing, 1,200 by the end of 2018. Where are you looking towards 2020 then in terms of headcount? Because you're going to be above that double.
We are de facto, we would be running 1 year ahead of schedule if we achieve that targets.
Yeah. In terms of H&A Group, the conglomerate, one of your clients, many foreign banks have stepped away from H&A. They're obviously struggling with fundraising and paying back some of their debt. How do you see them as a client? Why is the relationship being maintained with H&A, given the struggles it's facing?
As you know, we don't discuss client matters in public, so I will refrain from making any comments on clients' activities.
Okay. In terms of the macroeconomic environment, how is it shaping up? What are you seeing for the year? Where are the opportunities? Where are the risks globally?
Well, of course, we do continue to see a robust economic growth. The 3.8% we saw in 2017 should be reputable. Of course, the mix of this growth is going to be different. We're probably going to lose some of momentum from the US, or at least not as strong as we had in 2017. Some from the rebound of commodity prices, generally speaking, some of it from the property here in China. On the other end, we do expect Brazil and India to continue to develop well, and of course we need to watch on the other end what's the repercussions of the normalization of the monetary policy by central banks in the near future.
Are equities in the US, Europe, are they starting to look a bit frothy at this stage, or is that synchronized global recovery underpinning those valuations?
I think that we can say that starting the year, we do believe that equities is still a good place to be, at least for sure in relative terms to many other assets classes, but also on their own. I think that at current levels we do believe that equities is still a place to be. But of course, valuations across all asset classes are high, and therefore want us to put a lot of focus and attention on quality and diversification.
What are you seeing in terms of trading activity from your clients, in terms of volatility? Are we starting to see a pickup now? Are you starting to feel a bit more bullish about that?
Well, there is January is too early to talk about the quarter, but in general, of course, you do expect January and the first quarter to be a little bit more active. But in terms of market volatility and realized volatility on financial markets, being on equities or on FX, it's still very, very low, and therefore I don't see a change of the trend we saw in the last 6-9 months. If I look into 18, I do expect probably a more normalized environment for volatility than the one we saw in the last few quarters.
And how do you factor in this move to normalization from the central banks, from the BOJ, from the ECB, from the Fed, of course? How is that going to play into the markets?
Well, I do think that to a large extent they are anticipated and they are discounted in the market, and therefore I do also look at the positive side of a normalized rates environment will create also some benefits to savers and also in general speaking, having a normalized rates environment should also have some positive effects on the rest of the economy.
Focusing on the business and the wealth management side of the business, Martin Blessing's taken over, of course. What's his mandate? What is the strategy for that core part of the business going forward?
Well, the mandate is evolution. There is, the business is very successful, and we, not only here in Asia, where we are the leader, but also globally speaking. If I look at our presence in Switzerland, in Europe, and in the Americas, we are the uncontested leader in wealth management. So we want to continue to evolve. There is no revolution; it's an evolution, and in that sense, Martins is going to focus on continuing to execute our strategy.
And you, of course, want to be the uncontested leader in Asia. China, a big part of that. What are the opportunities here for the wealth management part of the business, and how do you stand out given the increasingly competitive landscape here in China?
Well, of course, if I look at China and Asia in general, but last year, for the first time, the numbers of billionaires in China surpassed the one in the US. And in the next decades, in the next few years, also the size of the assets of those billionaires will exceed the US. So in that sense, as the leader in wealth management with a high net worth and ultra high net worth clients, this is a very promising market. If the economy grows by 6.4%, 6.3% in the next few years, and let's say even a little bit lower than that, is going to mean doubling the size of the economy in the next 10 years, which means wealth creation, which is not only going to happen with high net worth individuals, but also with more affluent people, and their need to invest, their need to diversify will create a huge business opportunity for us and our competitors. Therefore, I do believe that being here and being the leader today is a good starting position, and we are happy to compete.
In terms of the regulatory environment, you've met your capital requirements. Basel III is pretty much baked in. I know this is a question you've been asked before, but I will ask you it again. What's the strategy for shareholders, for rewarding your shareholders going forward?
Well, we do continue. We are very pleased that finally we got more clarity about the new framework, the so-called Basel IV framework, and we do believe that now there's going to be some discussions about how to implement those rules at national levels. But I do expect that we will be able, as we said in the past, to continue to have a growth of our base dividend line, and also complement any future profitability with other form of capital returns, being a share buyback or other forms.
And buybacks potentially, is there a time frame for that?
We will. It's premature to make an announcement right now, but we will. It's part of the equation. I think we always say that this has not really changed. We always mentioned in the past that we would have a dividend policy, a baseline dividend that should grow aligned with our profitability, and complementing this with a special dividends like we did in the past, or share buybacks.
What have you seen? What's the impact been, if any, material impact from MiFID II on UBS's operations. Are there any concerns that as volatility picks up, as trading volumes pick up further down the line, there may be some issues come to a head? It's been relatively smooth transition so far. Is that what UBS has experienced? Any concerns further forward?
So far so good. I think that this has been a smooth transition. Of course, we saw a little bit of reduced volumes in the first few days where people were watching and making sure that all the systems and reporting were working properly, but I don't see any major change so far. And we are well positioned in terms of we have leading capabilities in research, we have leading capability in executions, so we feel that we are well prepared for this new paradigm.
How would you describe the regulatory environment? What are the regulators getting right? What are they getting wrong, in your view?
Well, I do think that regulators did many things right. It's already mentioned a few times in the past, particularly after the financial crisis. There was a need to take actions and remediate some of the mistakes that were done in general, not only by banks, by many stakeholders. And I think that when you do all these changes in one go, of course you make some mistakes, and some of them have been fixed. Some of them probably needs to be fixed going forward. But I think that I'm very pleased that the big chunk of regulation should be behind us, and we can focus on growing our business and growing and managing the next challenges, because, of course, the last 10 years were highly influenced by regulations. For our industry, the next 10 years will be influenced by technology and other changes. So I think it's also a good time to look forward and not looking back at the past.
Did you welcome the tax changes that were pushed through in the US? How is that impacting the US side of UBS's operations?
Well, look, we always look favorably to any changes that makes business, any business place where we operate more competitive to operate, and we do expect those changes to contribute to some growth in the economy, and for sure the profitability of not only the banking sector, I think mainly the economy. So, and much of this is already being discounted in the prices of equities as we speak. So I think that is a very favorable view, but it's going to take time to see exactly how it's going to be implemented and how the market is going to react.
And in terms of CapEx, you could see corporations in the US starting to expand and starting to invest more in CapEx going forward as a result of this, do you think?
Yeah, we will see. That's really the $64,000 questions. That's the way to call it, right? So I think that we will see. I do think that on one end, one could say yes. On the other end, low rates and a lot of cash on balance sheets were there before, and I don't think that corporates needed to particularly to have new cash in order to make new investments. Probably is going to be helpful more for small, mid-size businesses than it is for large companies. But
what's your view on what we're seeing in Europe? Are you starting to take a more positive line? Obviously, the equities are doing well. The macro environment is looking more positive. Some of the political risk has been taken off the table. Are you a bit more sanguine about the progress that we're seeing in Europe?
There has been a lot of progress and a lot of potential issues have been avoided during 2017, but on the other end, if you look at what happened in 2017 and what we see right now between still the ongoing Brexit discussions, Catalan, the upcoming elections in Italy, the fact that in Germany we still don't have a government, and so I mean there are still a lot of open build inside in Europe to be addressed, and of course, the fact that there was a little bit of an economic rebound and there is a good momentum is helping to mitigate some of those fears. But we need to stay very focused on making sure that those issues are not derailing the good progress made in the last 24 months.
Is euro strength a concern in terms of a potential drag?
I think that probably a few percentage points won't really change much, but if the euro strengthened too much, of course, it may negatively impact the benefits of the low the monetary policy of the Central Bank of Europe.
One last question, hot topic, cryptocurrencies. Where do you stand? Are you focused on blockchain, or are cryptocurrency something that your clients want you to push into now?
Look, there's already many people debating on and making comments on that one. I do believe that what I've been saying for many years, I can say that blockchain is the real topic that will change the industry. I mean, the cryptocurrencies, who knows if they gonna be there or not, but for sure they are helping the development of a new way of interaction between financial intermediaries, and therefore it's net a positive news, but we have to pay attention that people don't get overly excited about short-term trends.
Sergio, thank you very much. Sergio Ermotti, CEO of UBS Group, talking to us exclusively here in Shanghai at their Greater China Conference.